You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options. Facebook.com/TheOptionsInsider or via questions at TheOptionsInsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from theoptionsinsider.com and co-hosts Alex the Viceroy Jacobson from Options Express, Uncle Mike Tusaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi, and Mark the Greasy Meatball Sebastian from OptionPit.com. The Option Block is brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets. Established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
All right, everybody, welcome back to the Option Block. We are, of course, everyone's favorite bi-weekly source for all things options related. My name is Mark Longo from the OptionsInsider.com, as well as from the ever-expanding Options Insider Radio Network. And on that network, you can find legion, indeed a plethora of shows, no matter what category of options trader, options user, options enthusiast you may fall into. We have a program for you. Financial advisors, basic retail, advanced retail, institutional. Maybe you're a futures options guy. Your interests fall more on the commodity side of the fence. Maybe you're a vol guy. No matter where your interests may lie, we have a program for you. And if we don't, one's probably coming down the pike pretty shortly. And if you don't see it, hey, shoot us an email. We want to know what kind of shows you're looking for, what you're interested in. And, of course, where can you find all these fine programs? Well, of course, iTunes, Stitcher, AHA Mobile, theoptionsinsider.com, all of our various network partners' websites, as well as the Options Insider Radio Network mobile app. You can instantly stream all 300-plus episodes of the old Option Block. If you have a lot of storage on your phone, you can even download all of those for offline listening, and you can also hit that question, that comment, that feedback button right there in the app. Shoot us your questions, shoot us your comments, shoot us your insight. Let us know what you're thinking of, what you're concerned about, what you want to know more about, and we'll do our best to answer them here on the old program. Speaking of this here program, I am joined this episode, as always, by my usual partners in crime, starting off with the man from the proverbial mountains, none other than Uncle Mike Tusaw from RCM Asset Management. Uncle Mike, welcome back to the show, sir.
Always a pleasure to be here, coming to you live from the mountains.
It's good to have you back on the old show, sir. It's been too long.
The mountains just weren't the same without the option block.
Indeed, indeed. And speaking of mountains, there are a few of them there, though he's mostly over by the coastline. Yes, I'm talking about the rock lobster himself, Mr. Andrew Giovinazzi from OptionPit.com, beaming in from the hinterlands of scenic and sunny Maine. Mr. Rock Lobster, welcome back to the show, sir.
You know what I have to say? After a couple days of thunderstorms, it is scenic and sunny again. Scenic and sunny.
There you go. See, if I say it enough, it's bound to come to pass eventually.
We needed it because I thought I was going to start sprouting, mushrooms out of the side of my head. We had so much rain. But thankfully, those are just my ears.
There you go. See, no hot skating because it's too warm. You can't fish because it's too much rain. I don't know what a diehard Mainer like you was doing in all that weather. Maybe going to the LL Bean factory outlet.
Exactly.
That's the other big Friday night activity out there, right?
Well, you know what? LL Bean is open 24 hours a day.
Really?
So it depends. It depends what you really want to do. But I don't know if I don't know. I don't hang much around the outlet, but Freeport does have a lot of outlet stores and some tasty vittles.
So if you have that waiter emergency, you need to get a new pair of waders at like 2 a.m., LL Bean has you covered.
Okay, you laugh though, because when you do go on a trip and it is like 4 o'clock in the morning, you're like, damn, it's open and there's nobody there. It's so easy. You walk right in, get what you want, walk right out there, waiters. It's beautiful.
That's awesome. I had no idea. I knew their customer service devotion went pretty far, but I had no idea they went that extra mile over there at the Bean.
It does. It goes deep. It goes very deep.
All right, and last but certainly not least, holding down the OX hot seat, he is none other than the Viceroy himself, Mr. Alex Jacobson from Options Expressed by Charles Schwab. Mr. Jacobson, welcome back to the show, sir.
Good to be here today, Mark, and an event-filled, news-filled day today. A lot of stuff to talk about.
There is indeed. So without further ado, let's get to it and dive right into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block. As Alex alluded to, it was indeed an eventful day on Ye Old Street today. It seems like some of those comments from Miss Yellen reverberating a little bit again. People starting to get a little bit nervous about these levels, and that played out in the street today. A bit of a bloodbath across most of the major indices. S&P closing off 1.25% roughly, or nearly 24 handles to 1958. The Dow off about a full percentage point, or 161 handles. And the Q's off, leading the charge, down 1.3%. on the day today. So pretty aggressive sell-offs across the board. By the way, if you're playing the home game, listeners, we are recording this on Thursday, July 17th. So bear that in mind. And, of course, with all this blood in the water, all this sell-off, VIX cash getting that tick up. People have been prepping and talking about the VIX being mean reverting. It's going to pop, it's going to pop. Well, finally, we saw a little bit of that today, at least. VIX cash ticking up 3.64 handles, or roughly a third, to close at 14.64. Oh, I'm sorry. Just ticked up as I was talking, 14.65 on the day today. So just a pretty crazy day across the board. Uncle Mike, you haven't been on in a while. Perhaps we'll start with you. A lot of stuff to parse, a lot of stuff flying around today. What caught your eye in today's whirlwind of activity?
Well, a couple things, actually. You hope everything's okay with the news that came out today. But, just seeing gold and silver come up, seeing the market come down at this point, I'm not in a position to where I feel comfortable selling any premium. I did not have any short puts going into today, thankfully. And, I was thinking about actually selling some when we initially dropped off earlier in the day, but I'm still going to wait a day before I dip my toe into that water. And I'm fine missing a little bit of the upside. I don't have to necessarily, for lack of a better term, buy the bottom or the exact bottom. But with this, you see the market coming down. You see a 33% spike in the VIX today. A lot going on today. The VIX actually catches my eye, and that typically doesn't catch my eye too frequently. But nonetheless, this is one to where I like this as a buying opportunity, maybe, but I'm going to reserve judgment on that until next week.
And by a lot going on, I'm sure you're referring to that study that says more millennials are living at home. Earth-shattering news right there, sir.
I know, that's just a shock to tell the hey, everything's okay, feel good. You don't have to take responsibility for your action. The fact that they're still living at home, I'm just going into heart failure hearing about such a thing.
Well, apparently the market agreed with you because it sold off 1.2% on that news. Now, of course, a lot of other news cooking today, in addition to the Fed spooking everybody earlier this week. Of course, that plane disaster coming out of the Ukraine today, a lot of commodities spiking on that news, and the back and forth over the sanctions out there. A lot of stuff going on right now. And, of course, on the corporate side, of course, Microsoft slashing jobs, a lot of jobs, 18,000 jobs to be precise. So a lot of perhaps somewhat dire news floating around out there. Mr. Jacobson, what caught your eye in today's activity, sir?
Well, I only had a handful of up arrows today, and interestingly enough, the exchanges were up. And the exchanges had pretty much been downgraded because of modest trading activity the last week or two. A lot of people positioning for IBM and Google who are reporting, and IBM actually beat, so it's up like $5 in after hours. But the big story today was volatility and the big spike in volatility. And, market looked like it was going to rally in the last 15 or 20 minutes. And then the news that the Israelis had started their ground attack just slammed it right back down. And, VIX moved, 35% today with the Dow moving 1%. Normally that ratio is, 10 to 1, 15 to 1. Today you're 35 to 1. So there was clearly a lot of people rushing into vol, and today's events kind of vindicate all those people who've been talking about, vol needing to mean revert or spike back up. Be interesting what happens tomorrow, but a lot of really interesting news today. You pointed out, Mark, that Yellen had pretty much talked down the biotechs and arguably the emerging markets. And biotechs weren't doing that bad today until the Malaysian plane was shot down, and then everything fell out of bed. Just everything fell out of bed.
Yeah, it seems like whenever the boots hit the ground, that's when the commodities go haywire, and of course that's when the vol goes haywire, and we saw that play out yet again today with the news of the Israeli offensive, you call it what you will, and the resulting turmoil in the marketplace. Of course, the plane crash adding to the tumult going on out there. So just a lot of dire news really shaking the market. And going back to Yellen as well, I'm trying to think, probably the last time I remember a Fed chief really pontificating on valuations like that is probably the infamous Alan Greenspan irrational exuberance line. I don't think Yellen went that far, but she certainly did call out some sectors in the marketplace, including some very big, very retail-heavy sectors and names like Facebook, and saying, hey, these things are a bit lofty. You don't really see a lot of Fed chairmen diving into those fray very often. So that in and of itself was pretty interesting, and that was just the start to a very tumultuous week so far. Mr. Rock Lobster, take us home. What amongst this whirlwind of activity really caught your eye today?
I thought the whole day started off ugly. I did I sent a little blog out about it, not looking great this morning because I think that Russian sanction thing caught everybody by surprise. Most of the time, when vol goes up, people are surprised. But, I think just the tenor of that whole sanction thing this morning, it got people a little iffy. I think just right from the get-go. And stocks actually, I think we were kind of almost, did we ever even trade close to even today? Yeah, we did. We were actually up on the day. We were trading, 190? We were trading 198 again, right? So we were up on the day a little bit. And I think after that, for whatever reason, that news was, I think the market just didn't take it very well. And then there was there was more to the story, so to speak. And then obviously, stocks just got schmundered a little bit. But it was a combination. Like the market doesn't do well when it has multiple things that make it worry. You got new Russian sanctions. So the RSX, which was kind of a good vehicle, that is down like $2 today. So the Russian stock market almost down 10%. It's like 8% in one day. That's their big indicator. Probably, I'm going to guess probably oversold. I'll be looking at, I'd like to sell some puts in it tomorrow. I generally don't do it the first day. I like to wait a day or two and just try to get some good dollars for some out of the money puts. But it's like then the Hamas thing with Israel, that always makes people a little. So I guess a long story short is the sort of the headline volatility. We could go back to that 14 VIX, 15 VIX, whatever. It's certainly not because the market could start moving again. I mean, mostly we just weren't moving. And just getting the VIX back up to 14.5, basically I think volatility hit an air pocket as far as liquidity providers all of a sudden decided, there was no sellers anymore. If you look at the way volatility was trading, I call it, if you follow volatility at all, it's like almost like a step function where you're in the SPX market where there's like volatility at a price and then it's gone. It moves up to the next level because everybody's like, I'm not selling here. And then there's all of a sudden there's no buyers at that level. So everybody looks at each other. It's going up again. And it's going up again. And that's kind of what we had. And I don't really think it feels like anyway. I don't think we actually got a top in volatility. There just actually was no, there were no sellers essentially. It never, I don't feel like anybody ever really stepped in to sell vol at this level. The only place where vol was being sold or not really running as much were the VIX futures. I mean, they were severely backward here toward most of the last couple hours of the day. So I found that, I'm not going to call it surprising, just, usually when you have that vol future not jumping up over the cash, the future traders are thinking this cash level is not going to really stick around. They're looking at the news. They see some headline news. Oh, Israel and Hamas have been exchanging missiles for like the last 25 years. That's not really too new. Oil spiked a little bit on it. I think that caught people by surprise. But vol itself, if you look at the chart of volatility from, I'm going to say, 3 o'clock to 4 o'clock, there was no market for it at all. It just totally dried up. And I think the only thing that stopped it really was the fact that we closed. And I think it's kind of where we are right now. A little, into the close, maybe it drifted off a little bit, but I think that's mostly just marks. But again, like I'd say, I would be surprised if we saw a big jump in volatility tomorrow, although on the opening, you never know what could happen, never know what happens overnight. But I would think in order to sustain, we're going to need more headline news for sure.
I think to Andrew's point, what we saw at the end of the day were folks just trying to position themselves for overnight. And, we look at volatility, we look at the VIX, we look at the VIX products. Volatility in the bond markets today was phenomenal. The U.S. 10-year traded about a 40 realized vol today. The Germans traded a 70. And I know every time I bring up sovereign vol, some of our viewers roll their eyes. But the other thing I think you're going to find today is, and this is a forecast, and I'll probably be proven wrong, I think you're going to find today is the most active day ever in the United States. I think when all the stats come out, the day sessions today are probably going to set a record. I'd expect 25 million options traded today. And as I was saying earlier, the exchanges were some of the only green lights. But the amount of trading that was going on today, the amount of positioning that was going on today, I've never seen in my lifetime. That's how sort of wild it was today. And I've seen days where everybody rushes in. But today it was everybody rushing out, reasonably orderly decline. Except for the vol products, and then the last 15 or 20 minutes when the news hit about the Israelis going into Gaza. So, sit here and say, well, tomorrow's going to be interesting. Tomorrow's going to be real interesting. We got IBM and Google earnings, and, IBM after hours was up 5. It is now down 2. We're, 20 minutes after the close. There's a lot of money being thrown around in expectation of what tomorrow and the weekend could look like.
Well, that's saying something, Alex. You've been around for a while. You think this is the craziest or most active day that you've seen in all of that span. That's worthy of note in and of itself. I'm looking at some of the numbers here while you were talking. Just straight up SPX right now. It's been averaging 770,000, of course, as we've said. Of late, those numbers are a bit down, so that's probably a lower ADV than we've seen earlier in the year. And today it got up to nearly 1.2 million, 1.15 million to be precise. So a decent bump there. I haven't had a chance to parse a variety of the others here, we can, of course, pull up the other big stalwart, VIX. VIX has been averaging about 570,000 contracts a day. I know clearly that's low. Typically, it will be higher, probably in the 700,000 range or so. And this one also doing 1.15 million contracts today, too. So just anecdotally, in those two, albeit very large names, doing some substantial numbers today. And again, probably the reason CBOE being one of the exchanges that's off to the races today, closing up 3% on the day off that news, or about 1.4 handles on the day to 48.15. Their proprietary products doing fairly well in an environment like this. Alex also mentioned Google. We are, of course, awaiting those numbers. It does seem a little bit droll to be looking at corporate earnings when all these other macro events are stealing the headlines. But c'est la vie. That's what we do here on the old program. Google closing today 573.74, so hovering right around that 572 half strike. That 572 half straddle going out looks like about 25 at 29. So expecting a fairly decent move so far, at least. We're only seeing about 5 handles worth of movement in the after hours. It's up about $5 to 578 half or so in the after hours right now. We'll see how that move shakes out. Alex also mentioned we're also looking here at, of course, IBM. They had a big announcement earlier this week with Apple. Uncle Mike, I wouldn't mind getting your opinion on that as well. They kind of announced, essentially you can call it a joint venture to use some IBM's data into a lot of Apple's products to make, I think, their infrastructure better, their cloud support better, and just all their product experience better. Clearly a shot across the pond there at Google and what Google's up to. IBM closing today 192 half. So splitting the difference almost literally between their two big strikes, so 190, 195. Let me see. Actually, no, there is a 192 half strike, so I take that back. The 192 half straddle, this is literally a daily option at this point, going out here right around $6.50, and looking here in the after hours, selling off about $1.50 so far, trading down to 191. So we'll keep an eye on those as the show progresses. Uncle Mike, what was your take on that deal with IBM and Apple? Did that prompt you to make any changes? Are you still playing wait and see? Apple, of course, coming out next week, selling off today about nearly 2% or nearly 2 handles to close at 93 and change on the day.
No, the deal itself really didn't prompt me to do anything. Honestly, today, what I was looking at is just the sheer numbers of it. Going into earnings right now, this is very likely going to change before earnings, which come out on, they're doing weekend earnings this week, I think Saturday morning, right? Is that the case, Mark?
I think it's Sunday morning, actually. So get up early, have a nice breakfast, and then you'll be all set.
Got it. So likely this will change before earnings. But going into today, what I had done in the overall Apple position, the longer-term hedge is actually in October. So we're long stock. And the October 80 put was the long-term hedge. And then I had just gotten out of a portion of the calendar spread a few days ago. And the calendar spread with which I was using as a mechanism of financing the long put hedge was the October-August $85.71 put spread. Now, number one, I want to mention that since the split, these strike prices are a royal pain in the butt to talk about because of the odd numbers that they're in. But what I was not in the short side of the put spread going into today. So on the dip, I got back into the short side of the put spread, and so that one's worked out so far. I didn't exactly buy the low by any means, but I definitely got in on the dip at a pretty good level that I'm pretty happy with right now. So going into earnings, I'm likely going to be just long the put, long the stock. That's the main thing right now, I think, as opposed to the deal with IBM. Also, the other thing, we just need to watch just the macro news that's going on. Macro news, just the old saying, a sinking tide can lower all boats.
Well, that wasn't the only news causing some interest, some ruckus over there. Some news in your neck of the woods as well there, Alex, particularly in the brokerage side of the fence, with the Senator Carl Levin coming out and making some news. Apparently he's read Flash Boys, or at least one of his staff members has briefed him on it, because now he's making some news that he wants payment to essentially go away. In particular, maker-taker. He came out today and said that eliminating maker-taker pricing would improve confidence in U.S. equity markets. Again, most of this is equity-focused, listeners, but what happens in the equities markets tends to follow in the option markets. He goes on to say, such action would reassure investors that they can rely on their brokers to provide best execution of their trades without having to question whether a broker might instead be seeking to maximize his own profits at the customer's expense. Now, there's a lot of different sides to this coin. It's a very hotly debated issue in the option space as well. Maker-taker, for whatever reason, seems to have galvanized the debate in a way that people have been trying to do for over a decade, since the launch of payment for order flow. I remember having this debate back in 1999 when this stuff first started, and our pit sent data to the SEC about how customers are being demonstrably impacted at the time. This is, of course, pre-linkage with trade-throughs. They were everywhere. The industry was ripe with trade-throughs, and they punted the ball then. We're well over a decade past that now, and maybe now it finally seems to be getting some traction. Of course, the flip side of that is that a lot of people may argue on the brokerage side of the fence that this renaissance we've seen in the retail brokerage side, particularly in the retail option space with these amazing platforms, really, really dirt cheap commissions, a lot of that has come on the heels of payment. Payment has gone toward subsidizing a lot of that investment and R&D and that bringing down of costs. So there's two very clear sides to the coin. I know there's a lot going on today. Alex, did you have a chance to follow this at all?
Yeah, I actually saw that announcement. I think that announcement actually came out yesterday, and I personally am not fond of maker-taker, but to your point, Mark, prior to multiple lists and payment and full electronic trading, we did 3 million options a day, and it cost your brokerage house $1 to do a trade on the floor. In 2000, when we started the ISE, Schwab was $29.95 and, $250 a contract. Today, a lot of people are trading in the dollar plus and even less area. I think this marketplace will evolve again. The good thing about maker-taker, when I worked at the ISE, when we adjusted the model, people told you, market makers told you that if they were showing 5 contracts under maker-taker, they would show 100. So clearly, there's a liquidity issue, and the challenge in the short run is the liquidity has evolved. All the independent market makers, all the little guys are gone, and the little guys provided a lot of liquidity. And the proposal looks like we may evolve back. And then there'd be a place for independent market makers. There'd be a place for competition. The issue of your broker selling your flow, are they, really going out to get NBBO? I can tell you at OX and Schwab at OX with the smart router, clearly we're working hard to get NBBO. But we do have, favored market makers. We do have people we preference, and those people will fix anything, adjust to NBBO, price improve, and, that's where we are 14 years after the beginning of all electronic trading of options. Looks like we'll evolve again here, and I don't know how long it'll take, but it wouldn't surprise me to see maker-taker go away. Maker-taker going away doesn't necessarily mean payment goes away. There's a value equation in all this, and it's a much longer conversation than I want to have on the podcast, but I think the market will evolve again, and the option market will look, differently. But, let's say, left the CBOE in 2000, 3 million a day, I'll bet you we trade 25 million options today. And that's a testament not only to the market structure, but to the evolution of electronics and the competition of exchanges and, multiple listing. You quoted the volume figures for SPX and VIX, and I would argue if those were multiply listed, the SPX today would have done 3 or 4 million contracts, and the VIX would have done 2 or 3 million contracts. There's still a bottleneck by the fact that they're singly listed, pit traded. So I think we're in for another evolution, and, we'll watch it and we'll talk about it on the show.
Yes, interesting stuff. The term maker-taker certainly seems to have become a lightning rod for whatever reason. I always find it odd that all this vitriol fixates on maker-taker, because maker-taker actually started out with a bit of a noble intention and wanted to try to bring some incentive back to the world of liquidity providers and keep them in the game. It has since been bastardized every which way for Sunday at this point, so it's kind of a pale shadow of its original incarnation. But that was the original intent behind it. And of course, maybe if payment had started that way to begin with, it may be a different ballgame altogether. But c'est la vie, I tend to agree with you. It seems like there's like dark pools and other things. There's a lot of heat on these things these days, and maker-taker is certainly one of them. It probably is going the way of the dodo. Speaking of going the way of the dodo, the trading block's going to go the way of the dodo, because it's time to dive right on into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
And before we start the old Odd Block, Alex, you were pretty close, according to our friends over there at Trade Alert. The total preliminary option volume for today came in just a hair under what you were thinking, 22.8 million contracts. That's 56% above the recent average. Of course, those recent averages have pretty much been in the toilet, so bear that in mind, listeners. And calls outnumber and puts 11.59 million to 11.18. Interesting. Usually a day like today, when everything's moving in one direction, you see a bit of a bias toward that direction. In this case, it would clearly be the downside, but we didn't see that today. Calls actually lead in the charge today. So interesting stuff, Alex. You were pretty close. 22 points. I'm not sure where that ranks in the pantheon of great days. I'll have to do some research on that. You have any idea where that falls?
I don't. I suspect it'll be in the top 5, but I don't know.
When in doubt, our friends at Trade Alert always seem to have the answers. All right, rolling on into the odd block for today. Going to kick things off. We're always talking buying calls. In the spirit of today's activity, we're going to flip that script a little bit. Look at some put buy-in and some put activity in general going on out here. Going to kick things off with a newcomer to the old block. This is FXC. This is the Currency Shares Canadian Dollar Trust. The closing today, $92.42, down just about 11 cents or so. So not the bloodbath out there that we saw across the market. Of course, there has been some movement, some activity in the old loonie of late. And looks like what we saw today in the options was someone's betting that downside is coming pretty hard for the old loonie. This is the name that averages about just a hair shy of 500 contracts a day, doing 5,000, so over 10x that today. And what pretty much all of that, 5,045 of the 5,070 total contracts we saw going up out here today in FXC came in a mega trade, essentially 2 large blocks of the DEES 90 puts. We saw a total of 5,000 of these going up in 2 blocks, 2,500 each, obviously, with a few extra coming in for good measure at the end to 45 or so, going up for prices about 65 to 70 cents. Looks like they were buys. They're clearly opening because only 449 contracts open on this strike. So this is someone, looks like essentially just setting up a straight up good old fashioned downside spec on the loonie, given some of the developments we've been seeing going out there of late and in the currency land. I don't find this trade all that surprising. Mr. Rock Lobster, what's your take here on our loony bear?
You know what? Actually, that's a technical deaf term, a loony bear. Yeah, it looks like just straight up spec. I haven't seen a whole lot of other volume necessarily in the product, but hey, there is some today. I think the Canadian dollar was tied to the price of oil. Maybe there is with this recent run up in oil, somebody's sort of setting up kind of a little shorty position. The FXC traded like close to 88 this year, so it's had a pretty good run up. I think it's running up. If you chart it with the price of oil, it's looking kind of similar. So maybe they think all this oil rally is kind of a poof, and we're going to be looking at some lower levels. So that to me, again, that's what it kind of feels like. So just looks like somebody's straight out buying it, although there's a little bit of volatility in this thing. So, I mean, for a currency, we're talking 6% volatility, but, relative, it's a little bit more. So again, cheap puts, cheap shot, and somebody making up, not a small bet on the loonie going down.
All right, since we're talking Dees puts, let's keep that train rolling with another newcomer. I remember this name if we had him in the odd block before. Gerdau SA. I'm not sure if I'm pronouncing that right. This is an ADR, ticker symbol GGB, and they trade about an average 800 and some change contracts a day, so not bad from an odd block perspective. Doing 5,555 today, 5555. And once again, pretty much all of that coming in one mega trade out here in the Dees puts. I should mention, by the way, this name closing today, $6.09, closing down about 27 cents or 4.2% on the day. And again, a lot of activity in the Dees puts, in particular, the Dees 6 puts. We saw 5,000 of them going up in one mega block for 41 cents. That's on open interest of just 753 contracts. So this is a clearly opening trade. And it looks like when we dug into this a little bit further, it looks like this went up with stock. So on second blush, it probably is someone blasting out some puts and then putting on some stock against it, perhaps on a ratio. I'm not sure if it went up 1-to-1. Senior Rock Lobster, what's your take on these puts in stock out here in Gerdau SA?
I know it goes marked spread on ARCA, which generally, you'd have puts in stock trade, but it looks like they're selling them. However, almost all day long, there were buyers of puts in stock, buyers of the contracts marking buy rights. It's kind of I'm just going to say this was sort of a difficult one to totally read. It's one of those things where I really don't think it's a bearish trade. I think it's more like stock not going very far trade to slightly up trade, and any put buying is more on the hedge side. So, and in this particular case, it going up as spread. I mean, for it to be marked spread, it generally has to be tied to stock, or it's got to be connected to something. And there was no other position. So usually that means stock. So I don't think they're looking for a big move in this thing. I mean, the range on the stock is 566 to 829. So it just looks like they're trying to pick up some premium on a down day, and we'll see where this Brazilian steelmaker goes.
There were some small buyers after the fact and other puts, and vol did tick up on the strike about 2% or so net on the day, but that, of course, could be attributable to the 4% sell-off in the underlying as well. You're right, a bit of a tricky one. We'll have to play the wait-and-see game, I think, with a lot of our listeners to see how this shakes out tomorrow, where we'll know a little bit more. Listeners, if you want to play the home game, of course, keep an eye on this one. Surf on over to theoptionsinsider.com, where you can find more details on this alert, as well as a lot of the other ones we don't have time to get to on the show. All right, moving on to our next victim in the old odd block. This is Janus Capital Group Inc., ticker symbol JNS, closing today $12.26, down about 21 cents, or about 1.7%. on the day. And what we saw today out here in Janus Capital Group was more put action, not in December this time, but a little bit closer to home in September. And what we profiled on the site this morning was the SEP 12 puts going up 1,422 times for 90 cents. Went up in one big block. Looked like that was buying activity, but as the day went on, more volume came in behind it to the tune of 8,591. So a ton of volume on that strike. We also saw SEP 11s trading as well to the tune of nearly 7,400 contracts. Those look like mostly sellers, so it could be people coming in here legging into a sizable spread, perhaps taking one off. There is size open interest on both of these strikes. 41,000 open on the SEP 12 puts, 17,000 approximately open on the SEP 11 puts as well. So size paper here to go in Janus Capital Group. Mr. Rock Lobster, what's your take on all these puts flying every which way but loose here in JNS?
You know, the funny thing is I'm looking at JNS, and implied volatility is trading like at a 1-year high, even through the earnings cycle, even at a 2-year high. But let's just put it this way. Volatility in Janus Capital Group, don't they have just mutual funds and stuff? I mean, I think Alex would know, but pretty sleepy kind of company, makes money. Somebody is buying the crapatola out of these puts. I guess they had bought them before, maybe rolled up on the 11s, because when we profiled them last time, the open interest on the 11s was over 10,000. Now that open interest is, now it's 16. I mean, somebody's buying these puts. And as a buy right for yield, that 90-cent put looks pretty good in Janus. If, somebody is buying for disaster is all I can think of. And they're buying the SEP. They're not buying the July. I mean, in my head, I think these would make a good sale if you want to own Janus, at like, 11.10, which is, kind of the lows of the year for a company that pays 32 cents a year in dividends on a $12 stock. So the open interest is 41,000, and there's just lots of put buyers here. So, I mean, someone is looking for a pretty big smoking in this stock is all I can say. They haven't really gotten it yet, but that's what they're looking for.
Taking advantage of a little bit of a movement, perhaps to roll some of these puts up to a meteor strike here. But yeah, tons of open interest. It looks like there's a lot still to go here if this guy is rolling.
Yeah, absolutely. The stock is, it's ticking around its 52-week highs. It's not there. It's on the upper end. But, this 2-year, it's probably the only name, financial name right now, that is trading at a 2-year high for volatility. Because everything else, even with the rally today, is in the ash can. So the only thing I can think of is, somebody thinks this is going down a bunch. They had some luck, I guess, with selling puts initially on the 11 line. So this, again, the kind of confusing paper, but, like Alex would say, the volatility tells the story. It's at 2-year highs. So somebody is buying these things for a reason.
Hey, you know what I always say? When vol's at 2 years high, buy, right? That's a winning strategy across the board right there. That's why we call it the odd block, folks. All right, and taking us home here, rounding out the put palooza here in the odd block today, we have another newcomer. This is Entergy Corporation, ticker symbol ETR, closing today $76.27, down about $1.70 or 2.2%. So not exactly the best day for ETR. This is the name that does about 700 contracts a day, doing about 3,700 today. So decent size for this name. And once again, pretty much all of that, the lion's share of that activity in one big trade in the puts. And if Deese wasn't far out enough for you listeners, we're rolling out here to January to the tune of the Jan 70 puts. So some near out of the money puts here in January going up 1,400 times for $1.65. Wes, that's when we profiled it this morning. By the end of the day, another 2,000 had gone up to the tune of 3,440. Again, no matter which way you slice it, this is open in paper. Only 62 contracts open on this strike. But again, it looks like these were probably opening buys. Looks like, again, our standard old someone putting on some downside here, a little bit longer term in ETR. Could be a spec, could be an underlying holder. Given the fact that it's Jan, that is kind of near-term downside, I'm going to lean towards the latter of those two. But give us a little crossfire here, Andrew. Disagree vehemently with me.
No, I don't know. I don't have to be a vehement disagreement.
Jane, you ignorant slut.
To me, this smells like they just want some protection. Stock's up, a bunch, and I think they just want to stay long and not get out. That's, you've sold these puts before to like pension funds or hedge funds or whatever. I don't think they want to get out of the stock. It's an energy company, so. They just want to stay in. They want to collect their divvy. They want to watch the stock go up. But the market made them a little nervous. So, they jumped in and bought some put premium. So either way, anytime people buy puts in general, even though they're long stock, that means they're nervous. So it's usually never a great thing for the underlying. But they are looking for a little protection maybe so they don't get smoked out. If the market does kind of tank a little bit. They want something in their quiver, let's just say.
All right, and that's going to do it for the old odd block today. And now, because it's Thursday, that means it's time for us to roll right on into the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, listeners, and I apologize. We've been gassing on here on the show, but lots to talk about here today. But we'll see if we can rattle off a few of your questions, your comments really quickly here. Give you guys your chance to shine on the old program. Starting things off with a comment here from a listener named Jake. He writes in and says, I just wanted to let you guys know that I can't go a week without getting my fix of lobsters, bubble pipes, fancy hats, and, of course, Mark's baritone pipes. I guess double dose of pipes there. Keep the shows coming. It makes my week fly by. Well, thank you, Jake. We love a little love here on the old Odd Block. You guys are the reason that we do this show. All right, moving on to the questions. This is the question from a listener who goes by the handle Series 7. Love it. He writes, hey, Mark and his all-stars. I know you guys have touched on a stock being hard to borrow, impacting the price of the options. But I'm still confused. Can you break it down for me, please? Thanks. I know I've come to the right place. Well, this is a hot topic. People, particularly in a market like this, like to know how hard to borrow impacts options. We talked about it before quite a bit on the show here, how it impacts interest rates, how it impacts the price of the puts. All those crazy conversion reversals get crazy out of whack. It can be really confusing for someone who's coming to it for the first time. So what say you, Mr. Rock Lobster? Let's run through it really quickly here for our friend, Mr. Series 7.
For Mr. Series 7, the key part is how they price the combination. So basically, options are connected to the stock. You know, you buy a call and you sell a put. That's a synthetic, buying stock long synthetically. And when a stock is hard to borrow, the puts become expensive relative to the calls. So you actually can buy stock cheaper using options than you can in the market. So the cheaper the stock is synthetically, the harder it is to borrow generally, and you can actually work out what percentage rate the borrow is. So if you're a hedge fund, you actually get charged for shorting the stock. Sometimes it can be quite usurious rates, like 75 to 100% a year, depending on how crazy the borrow is and how long you keep it on. So I think the last hard to borrow we looked at it was GoPro, actually. So that's what it does. Now, if you actually like the stocks that are being heavily shorted, a lot of times they make good ratio put spreads, butterflies, things like that, where you can sell the downside put spread against kind of a more at-the-money put for little tiny dollars, and actually use the fact that the puts are so expensive to get yourself relatively cheap, even cheap protection, like buying a fly or something if you want to. So that's how they price. Of course, we do that in our gold class and all kinds of classes. We do at Option Pit. So hopefully that helped you.
You know, another thing to add to that, I remember back in 2008 when a lot of time, or maybe it was 2009, either way, the financial crisis of a few years ago when they were banning short selling on certain stocks. I think Bank of America was one of them, and I think there was a few others as well. And so what would happen would be the put premium would go up higher. And the reason for that is, let's say that I'm a big-time market maker. I'm in Mark Longo's pit, and when I'm doing this, I need to short some stock to hedge my overall position delta, let's say. Well, I'm not able to short stock right now because that stock that I need to short, I'm not able to short because it's not allowed to be shorted. So because of that, I have to buy puts, and that's going to create a greater demand, in theory, for put buying. And when that happens, that's going to raise the price of the put option. So food for thought on stocks that you're not able to short. That's something that just to add to that.
You know, that month there in October when they banned that short selling, you know, the handful of guys that are still active in this space making markets and who had some long stock on their books, they just printed money in that series until they finally woke up in Washington and reversed their decision. But it was just a question. These puts were getting bid so out of control. If you had long stock, you could, or other ways to hedge it, you could just sell those all day long. And it was nothing even remotely associated with theoretical value at the end of the day. And it was and what many market makers live for, and unfortunately it was the last day a lot of them had like that. So I still hear that story to this day. Oh, if we can only have them ban short selling again, this whole industry would survive for another day.
Well, it's funny, the things that they're helping who they're trying to hurt, and they're hurting who they're trying to help.
Yeah, it's almost the definition of unintended consequences there. All right, one more we have time for really quickly. Alex, sounds like a good one for you, so put your listening ears on. This is a question from Mr. Connor Mack. He writes, if I own a stock and I write an in-the-money call against it, is it the same thing as selling the stock? If so, what price am I selling the stock for? The strike price? If not, am I increasing my probability of my stock being called away before expiration by selling an in-the-money call? Well, Alex, a lot of things to correct our friend Connor Mack on in there. So have at it, sir.
So selling it in the money call means that you are selling at strike, and an in the money call is not going to have much time premium. So you are selling a tad above strike. You are hedging a little more downside than with an at the money or out of the money covered call, but you're not removing the risk. You're just getting sort of a fatter pillow if the stock goes down. And if the stock goes down a lot, you're falling out of a 10-story building and you're holding a pillow, you're still going to die. You're just going to bleed into the pillow. Will you get exercised? Yes. There's a very high probability you'll get exercised. If the stock pays a dividend, you will very likely be early exercised. If the stock doesn't pay a dividend, you will be exercised at expiration. So that's the dynamics of selling a covered in the money. It's much more of a hedge play generally than it is an income play.
I'm still laughing. Alex, I think you just stole the crown from Mark Sebastian there on the colorful metaphor of the show. That was fantastic. Bleeding into the pillow. I might have to appropriate that on occasion if you don't mind.
That one's awesome.
It's all yours. One quick comment on hard to borrow. Both Mike and Andrew did a great explanation. I'm going to give you a sort of individual investor explanation. Think of it as a stock that pays a negative dividend. So when a stock pays a dividend, the call price is reduced. A negative dividend means, as Andrew pointed out and Mike pointed out, you're actually going to borrow. And one thing about hard to borrow, everybody focuses on the puts, but there are people who focus on shorting calls and trading boxes. Let's just put one little caveat up there. Be careful you don't violate rig show. And an important note to make to customers, don't think if you violate rig show, as we learned at Options Express, and if you want to Google search this, please feel free to do it. But if you violate rig show, not only is your brokerage house, is it incumbent on them to prevent you from doing it, but the SEC will come after you and the brokerage house. So be very careful if a stock is hard to borrow on things like trading boxes or shorting calls. If you see an inflated put price and you think you're the only one who sees it, you're not. Tread carefully.
I don't think we touched on boxes really on the show before. Maybe we'll have to devote some time to them in the future. It hasn't really been a boom time for boxes the last few years, so we haven't had a lot of questions about those, but might be worth discussing down the road a little bit. All right, great questions as always, listeners. And now it's time for us to roll right on into our final segment, Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
Well, let's just close out here in the Around the Block segment with another quick recap here of the major earnings reporting tonight after the close. Google, like I said, going out of that straddle, $25 at $29. So serious juice. Looks like so far, at least in the initial blush here, the premium sellers are winning that race heartily. Only rallying about $7 and some change, $8 actually, in the after hours to $581.35 or so. So a bit of a move, but certainly not what they were pricing in here in the straddle. Of course, still some time to go. IBM still in the after hours, hovering right around the $2 to the downside mark. So that one also underperforming from a net premium perspective. Again, a lot of ways, different ways to skin that cat that you can make those trades still work out for you. Just from a first blush premium perspective, interesting developments in both of those. All right, Mr. Rock Lobster, we'll start with you. What are you watching for the rest of this week into the weekend, sir?
So we unwound a lot of stuff today. little strategy letter that we try to run. Mostly we had a lot of long vol positions that just basically you just have one of those days where you get to unwind stuff. So it's not that it was super great. It was okay. What am I watching to see if this holds up? Everything is telling me, at least from a vol future point of view, that this rally in volatility does not hold up. And I think the biggest reason why the vol did jump so much is because the market's tendency to snap back. What do I look at? Can oil hold up? Can the treasuries hold up? It feels like these are all just like short-term pops. So that's what I'm looking at. Is it anything it's been hard to find a decent position in them, but it feels like you should be able to lean a little short in these things, but it's been tough. It's been tough because you could go broke shorting treasuries this year. So that being said, and just again, I'm looking for really dopey things, not dopey things, but like buying stock and selling kind of in the money calls against them, taking this opportunity to generate some dollars with the jump in vol we got. I think there's some good stocks that just got smacked down a little bit, and I think it's going to make a pretty decent entry price at some point tomorrow, and even in the SPY. So, like I said, but we'll see how everybody digests the news overnight.
All right, Mr. Viceroy, what are you looking at for the rest of this week, sir?
So one quick comment. Today was the last day to trade cash-settled indexes, and this is textbook why you don't carry stuff like the SPX or the Russell or the NDX, why you don't carry them into Friday expiration, why you trade out of them early. If today you weren't going to close your puts this morning because they were 20 points out of the money and you didn't want to buy them back for 10 cents and pay commission, today was the one we will talk about for the next 10 years. You got murdered today. Do not carry that stuff into expiration. If you have, and you say to yourself, I'm going to sit here and bite my fingernails waiting for the opening tomorrow, you realize you have absolutely no control, and it's pure luck. So now that I've pontificated, looking at the Gaza Strip and looking at the Ukraine, and I am looking at the sovereign debt market, the volatility today was astounding. If we see another run to treasuries, 10-year drops below 240, 230. It's going to be a very interesting few trading days here.
Mr. Tusaw, take us home. What are you watching for the rest of this week, sir?
Well, just in addition to Google's earnings today, Schlumberger had earnings. It looks like they're down a little bit in after-hours trading. And, just curious to see if we can continue the downturn tomorrow. I'm kind of in the same camp as Andrew in that I think this is just a little bit of a pullback. But you guys know me. I am the eternal bull. And I just want to see if tomorrow gives us an opportunity to sell some puts. And by what I'm looking for tomorrow is if we seem to be more stable tomorrow, then I'm going to look to sell some puts even before a weekend just due to the pullback, which is something I don't like to do too often. But tomorrow I might.
Wow, that's a big indicator in and of itself. Uncle Mike blasting out some premium before a potentially crazy weekend.
He
might, I should say, yes. I'll put the caveat in
I'll
there.
probably chicken out. Who knows?
You'll be hovering on that mouse button all day long, and then you'll go have a sandwich, and it won't happen. But say love me. It still sounds good.
All right. It does sound cool.
All right. And that is going to do it for the Around the Block segment. It's also going to do it for this episode of the Old Option Block. But before we go, as always, let's check in really quick with each of our cohorts here on the Old All-Star panel. See what they have cooking that may intrigue you until the next time we all gather here together around the old table. Starting off with you, Uncle Mike. What's cooking in the land of RCM?
Well, first off, I want to say a big thanks to the new clients I got when I had mentioned talking about working for people who are looking to get to their retirement level. I've actually been able to process the demand with which I've had finally, so I'll open up the gates again. If you guys are looking to contribute $500-600 a month to your retirement and you want to work with someone who works with options, give me a call. Be more than happy to work with you. I'll have to do this in stages, though, just so I can accommodate the demand that we've had, so to speak. 312-212-3531 is my direct extension, or my company-sponsored personal email address at mtusaw@rcmam.com.
And I said it before, listeners, if you're even remotely intrigued by that idea, you're stupid quite literally, not the two-saw era stupid, but the actually stupid if you don't take them up on that, because the handful of advisors out there who do anything even remotely options worthy is so slim, it's so small. The percentage is nominal. Yet alone have a guy like Mike who's out there actively putting on protection for you, rolling it, adjusting it, doing his best to trying to pay for that protection on a regular basis. There's a handful of guys in the country doing that. So if you have an opportunity to get someone like that handling your money and you don't take it, then you only have yourself to blame at the end of the day. So take them up on that offer. Let me strongly encourage you. All right. And Mr. Andrew, what's cooking in the land of the pit?
I just had to add something to that. He's like, so when you're looking for an investment advisor, ask them what their BBI is. So you can compare it with Tucson.
There you go.
Right?
There you go.
If they have time to go to the bathroom all day, then you don't want that guy.
You don't want to touch him.
And then, like me, if they have the BBI issues, you don't have to shake my hand because almost 95% of my clients are all online, and I've never seen anyway.
There you go.
So anyway, besides that, if you want to do things yourself, or you actually want to understand what Tucson might be telling you, use them as a client. Come to our the Option Pit boot camp, where basically all the stuff we talk about, you can learn. That is from August 12th through the 16th. It's about 8 hours of learning. You get to try our chat service and just, understand how these option things work and how you can make them work for you. Once you understand how they work, it's a whole heck of a lot easier to use them. That's basically our number one motto at Option Pit. And that's our next thing we got going on. August 12th to the 16th. Surf on over to optionpit.com under events, and you will see our boot camp.
All right, and take us home. Mr. Viceroy, what's coming down the pike over there at OX by Charles Schwab?
So very quickly, the next live event is Saturday, August 9th at the San Francisco Airport Westin. Jimmy Ruzan and the crew will be doing their half-day presentation. And a little caveat here, when markets do what they did today, seats tend to fill up quickly. So please go to the site, optionsexpress.com, register for that. Handful of webinars I'll showcase next Tuesday, July 22nd. Nina's going to do the trading platform and site tour. Wednesday, the 23rd, Mike Zaremski is going to do trading futures. After the close, I will do Idea Hub. That's at 3:15 Chicago, right after the close. On the 24th, Nina's going to do advanced order entry and walk limit. I know we've talked a lot about walk limit on this show, probably the most innovative tool in the e-commerce space. If you haven't seen it, you got to tune in and learn about it.
All right. Since Alex did mention live events, let me also mention to you listeners, if you are going to be in the Chicago area in September, and particularly September 11th, we are toying with the idea of bringing back the old Option Block live show. If you've been listening to the show for a while, you know, about exactly 3 years ago, we took over a big venue in downtown Chicago, had a great live show. A lot of people came out, a lot of great guests. It was really fun. We're thinking about doing that again. So if you're going to be in Chicago on September 11th, that is a Thursday, then mark it down in your calendars. We don't have any information about venue yet or anything like that, but we'll get to that as we have more details. But just mark that in your calendars for now. And if you're going to be near the Chicago area, make it a point. Swing by. We'd like to see you. And on behalf of the Viceroy and Uncle Mike and the Rock Lobster and, of course, myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing and for sending in such great questions. Keep those coming. And we'll see you next time right here on the Option Block.
The Option Block was brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets. Established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/The Options Insider, or via questions at theoptionsinsider.com.